not practice by another 10 or 15 years. And for the next 30, 40 years, your practice is, you don't need to worry about practice at all. Compliance requirements are so high, we were just discussing with Madhukar also, so high that I think the industry will look exclusively at professionals like chartered accountants to do the compliance. In fact, if you look at section 42, there is an audit of records which is required also by chartered accountants or cost accountants, because today you know that it's not only CAs who can do audit, even cost accountants are allowed to do audit. I was present during when there were arguments in Karnataka High Court on this issue, where cooperative societies could be could give cost and works accountants the right to do an audit. And the High Court said, yes, they are on par with chartered accountants or to that effect. But it must be realized, I think a time has come where we should impress upon people that audit of financial records is substantially different from audit of cost records. There is a substantial difference between the two. And among all the three professional institutes that are there, you will agree with me that the rigorous training is there only for the Institute of Chartered Accountants. It is not there for the cost and works accountants or the company secretaries. So I think that distinction has to be brought home, probably in some court of law it will be brought home, so that the primacy would be given to chartered accountants for the purpose of audit. Now coming to our subject, credit mechanism under GST. As most of you would be aware, we are always working towards a regime, or we have always wanted a regime where there should be a seamless credit mechanism, as they say. Because you would have been told cascading effect of taxes will have to be completely done away with. Now, does that happen? Have we seen this happening in the last almost 20 years or 30 years of MODVAT working? You see, it started off at 1986, MODVAT started. 1991-92 onwards, the invoice-based system came into vogue. 1994, capital goods credit came. 2004, we had unified CENVAT credit rules. But before the CENVAT came, MODVAT was rechristened as MADVAT. Most of us knew it only as MADVAT. The amount of litigation that we have handled in MODVAT is probably the maximum that has come about, even exceeding all the excise and customs litigation in general on valuation and the SSA exemptions. I think the credit scheme gave the maximum litigation in the last 20-30 years. And it's not that after CENVAT came, it has gone. Litigation has gone in a different direction, that's all. Now, when GST starts, I can assure you of those who are worried about, whether practice opportunities will be there, I can assure you that your litigation will be very high under GST, as much as it has been under CENVAT. Let us look at what is it that you can take credit. You are all probably, how many of you are aware about MODVAT, CENVAT? In general, I'm saying. Most of you are aware? Good. Now, what we need to look at is what is it that we can take credit, first of all. It is important for us to know what is it that you can take credit and what you can offset it against. What is this credit mechanism? Why do you have a credit mechanism? Why can't you simply tax everything at the retail sales stage and be done away with it? There is an option where you can collect the tax at the retail sales stage and be done away with it. Is it not? You look at it this way, why do you want to tax the manufacturer? Why do you want to tax the wholesaler? Why do you want to tax the retailer? Why don't you straight away tax the retailer once and for all at an enhanced rate and close this? Why do you have these credit mechanisms? You don't require. What does Singapore do? They have a general sales tax. It is called not GST, it's general sales tax over there. At the retail stage, and they're done away with it. Why is it that we don't have that? Can anybody tell me? Why is it we don't have? The possibility of missing out the transaction itself is very high at the retail sales stage. Manufacturers are more organized, but to enforce a tax at the retail stage is very, very difficult, and the chances of losing the revenue completely is very high. That is why it's not only in India, so hundreds of countries have introduced this value-added tax. That is the reason why you have this credit mechanism ensures that you can offset the credit with your liability on the output side and pay only the net tax. That is all the credit mechanism is. What I purchase contains certain tax. What I sell, I am liable to pay certain tax. Now, if I don't allow this offset, there will be a double taxation. To put it simply, how many of you don't know anything about SENVAT at all or MODVAT? Anyone? Otherwise, I will give you an illustration how it works. I had to do this in a high court. Let me tell you this. How it works. When I buy inputs or when I buy input services, there is a tax component. When I sell goods or when I supply services, I pay output tax, and the value of the services which I supply includes the value of the inputs. So there is a double payment of tax. So they allow me to set off one tax against the other, and I pay only the net tax. That is called, on my value addition I pay the tax. I pay tax only on my value addition. I don't pay tax on his value addition. So that is the concept of giving you a credit set off. And what are those components on which I can get a credit? That is very important for us to know. There are three: capital goods, inputs, input services. When it comes to a GST regime, please understand that the output tax goes on supply. It does not go on manufacture. I think that Madhukar would have already covered. It doesn't go on manufacture, doesn't go on provision of services. To put a simple example, let me tell you to clarify. Let us assume that I am a chartered accountant, I get work. I don't do that work. Let's say I subcontract it to somebody else. He provides the service. Under the existing regime today, he pays the tax. Only one of us pays the tax. But when it comes to a GST regime, he will be providing the service, I will be supplying the service. This is the distinction that you should keep in mind. Both of us will be liable to pay tax. He on the provision of service and me on the supply of services. Supply includes provision. If you see, you look at UK VAT, typically supply includes provision. I will bill the client and I will take credit on what he bills me. Simple. There will be no cascading effect. He will bill me, I will bill the client. It may be happening now also, but strictly speaking, the service tax today is only on provision of services, not on supply. There is no concept of supply of services being subjected to service tax today. So GST as a regime will cover a much wider range, and that is why even if I agree to supply the services, I would be liable for tax under the GST regime. So it's a question of supply, and what is supply has been explained to you. Now against the tax that is payable on supply of goods or services, I may be utilizing capital goods, I may be utilizing inputs, I may be utilizing input services. The tax I pay on them, I should be able to set off. Now what really are capital goods is shown in the slide. It is almost identical with the existing definition in the SENVAT credit rules, except for this. What does it say? In SENVAT credit rules, it talks of capital goods being used in the factory or used where the output services are provided. Here, if you look at it, it is called used at the place of business. Place of business. It should be used at the place of business. Now, what do you mean by place of business? 2 bracket 75 would tell you what is place of business. Where do you carry on your business? It will include warehouse, it will include your godown. Wherever you receive goods or wherever you receive services, wherever your books of accounts are kept, that is also place of business. So therefore, if I use a computer in my office, that is also capital goods. Because I am using it at the place of business. If I am using a computer in my agent's premises, either me or the agent can take the credit. Either me or the agent can take the credit depending on who pays for it or who is allowed to take the credit or who is providing the taxable supplies. Please understand the concept of ownership is alien to this. Kindly understand in SENVAT or MODVAT or in GST, concept of ownership is alien. I need not own the goods to take credit. If the utilization is there, I can take the credit. So long as another man does not take the same credit. That is the only condition. Ownership is not a criterion. So place of business is very important for us to know because it is very widely defined. And we hope that when the law actually comes, it will remain in this state, because if it does not remain in this state and it becomes restrictive, as we have seen, you see, if you take the SENVAT credit rules, all activities relating to business was covered under input services up to 2011, and then they amended the definition to make it restrictive. We are hoping that this definition will remain as wide as it is. Now you look at the second clause. Outside the place of business for generation of electricity for captive use or capital goods used for supply of services. When I say used for supply of services, what do I mean? Anyone? Nexus theory, is it necessary? Can I read for as for the purpose of? Is passive use not allowed? Anyone? Supposing, I will give you an example. I buy a set of computers for the purpose of using it in R&D, research and development. Can I take credit? Ultimately, I supply, let us say, some services. But to ensure that I am giving some other services, I am developing something new, let us say. I am developing a new software, I am making a lot of research. So I import a lot of computers to do that research work. It may or may not result in a supply. It could. It could. Can I say that I am entitled to the credit? Can I say that it is used for supply of services? Why no? It's yes and no, even I can tell. You should tell why no, why yes. Huh. What does it say? Used for supply of services. What do you say? Law says used for the supply of services. Now I am saying I am not used it for, I take the department's view, that is called the devil's view. No, devil's advocate. Supply of. When you use the terminology for, It means for the purpose of. Any number of decisions are there. On this, there is one decision in 332 ITR which you will find GVK International's case, Constitution Bench, which said for the purpose of India means for the purpose of. The definition is not restricted. For means for the purpose of. So even if I use something for R&D which doesn't immediately result in a supply of service, it can ultimately result in a supply of service. You can take the credit because it is used for the purpose of supply. So this kind of interpretational issues will remain. One more important thing is, if you look at a place of business, what does it say? Used at the place of business for supply of goods. It does not say used for the purpose of supply. Please, used at the place of business for supply of goods. It does not say used for the supply of goods. That means mere usage in your place of business is sufficient. So nexus theory is not immediate, it is a larger nexus. Larger nexus you can use. The nexus can be larger and still you can take capital goods credit provided you fit into this definition of goods which are there. If you fit there, you will get. If you don't fit there, what happens, I will tell you later. We still have some solutions for that. Likewise, motor vehicles, there is a set of things where it is allowed, not allowed. Typically, the problem with our executive is this. They will give you a law which is liberal. They will doubt whether they are giving it to a fellow who is capable of handling it. All my own assessment, he is actually capable, but my shak hai na, I have shak. I can't trust him fully. These are the only 3 or 4 Hindi words I know, incidentally. So don't please ask me any question in Hindi because I would not have followed it. Even, I used to tell my wife, even at gunpoint I could not get more than 45 out of 100 in Hindi. 45 out of 100 in Hindi. I could not. Simply I could not get more than that. So few words, we see this once in a while when we see these Hindi serials. Once in a while. Then we get to know some words. So useful words I can use like this in some seminars. The biggest problem is, if you see Senvat, why you have so much of litigation credit, Senvat is, I give you a facility, I doubt you. Then I sit and decide what you should do. This is the biggest hassle in credit. I will tell you, these are the capital goods that you must use for the purpose of getting credit. This is absolutely idiotic in a world which changes every minute. You have to decide how you will do business. How can I sit and tell you how you should do business? It is not possible. This is the only reason why you have, see, you look at this. I have highlighted it. Motor vehicles designed for transportation of goods, including their chassis, registered in the name of supplier of service. You are not allowing that man to render services on outsourced vehicles. You want this vehicle to be registered in his name and only then you will give him credit. Now, these kind of restrictions, which are not having any nexus, because I told you ownership has nothing to do with Senvat. But this is a case where ownership becomes necessary for Senvat. Motor vehicle credit. It is not as if a business, a person who has a business today, let us say you are running a BPO. You purchase a car, you can't take credit. Today you can't take credit. Same thing will continue in GST. Then how can you avoid cascading effect? Please tell me. Any value addition has to be measured in terms of that business only. I cannot say value addition of his and his will be the same. I can't say that. His value addition will be in manufacture and yours will be on Services, I can't put the same yardstick. This is one of the faults in this GST which continues from Senvat credit. Supposing you can't take it as capital goods, you still have a solution. You can take it as input credit. Input means any goods other than capital goods. And you see the definition here is very wide, much wider than our Senvat credit rules probably. Much, much wider. If you look at it, what does it say? Please see it carefully. The inputs should be goods which are used or intended to be used for making an outward supply in the course or furtherance of business. This is probably one clause which I am telling you today, if it remains as it is when the GST bill comes out, we will have a lot of work. Because who is to decide what is used in the course or furtherance of business is the first question. One question was asked in the last section by some gentleman. Who is to decide on transfer of this, what do you call that? Tax. Who asked that question? Is he there? He's not there. Good. He asked the question and he disappeared. But that question was lingering on my mind. The question was, who will determine here, who will determine what is used in the course of furtherance of business? Who is going to determine this? Please, anybody? Is the government going to tell you, or you are going to yourself determine? Absolutely. This is the case with everything in GST. Please understand. This question need not be asked. Who is going to try, who will determine where supply takes place? Assessee. Government is not going to determine anything. Let me tell you, they have never done it. Please don't expect them to do all the impossible things. Till now, have they given you any facilities?
They can only object.
And you should be happy about it. If they don't object, what will be your future? You think about it. I tell always in every seminar, you have so many deities in this country. Add the commissioners, add the assistant commissioners, add the superintendents, inspectors. They are our gods. They give us maximum amount of work. Imagine if they could not interpret the law in the way they were doing, how they interpret. If they stopped, what will be your my fate? Let them interpret the law in the way they have. Don't try to change them. Don't go, I don't like this attitude of you chartered accountants going to the officer and asking, sir, am I allowed credit on this? Arey, you are qualified than him, I say. Why should you go and ask him? Don't ask him. If litigation comes, so be it. We are there for that only. When I say, let's come back to the definition. When I say if it is used in the course or furtherance of business, anything used in the course of furtherance of business becomes inputs. Nexus is very remote, very wide. Whatever I have for business, I can use. Accounting services utilized by me is in the course of furtherance of business, because without accounting services, I can't do anything. Audit services, I can take credit. Security services, I can take credit. Advertising, I can take credit. Because they're all used in the course of furtherance of business. I purchase some, let us say, purchase some software. If that is not listed as capital goods, I can take it as input credit. Yes.
Used for the installation of capital goods.
I will come to that. There are some exceptions where they have made in the course of the section itself. Inputs used for capital goods will be allowed, but the inputs used for making it into immovable property is not allowed. You know, it's drafted like that. That is how it is drafted. But definitely goods which are used for making capital goods, let us say, become inputs.
Like office equipment,
Absolutely.
furniture
Absolutely. Everything you will get credit as capital goods or as input. Input means any good. Please see that. Input means any goods other than capital goods. Any. Any means everything. But there is a problem which I will need to point out here. How is goods defined? Goods is defined as any movable property, but does not include intangibles. Intangible means something which you cannot touch or feel. That's how it is defined in the law, intangibles. Electricity is? No, it is goods because you can feel it. Electricity is goods. NTPC's case, Supreme Court, AR 2002, you will find it. Electricity is goods. Here also it is goods because it's touched or feel. Or. You can, if you feel it. Why I am saying there is a problem in the drafting of GST law, I think Mr. Madhukar, being at the helm of affairs in the institute,